Hey everyone, this is Rob Keynes from goldsilverpros.com. I have a very special guest today, the CEO and director of Blue Lagoon Resources, Rana. How are you doing today, Rana?
Fantastic. Thanks for having me on your show, Rob.
Well, it's a great time to have you on the program because, as you know, gold has done very well since 2018. And I think this is a perfect time to invest in the miners as well because there seem to be some shortages in the physical supply of gold and silver. So a good time to have this conversation. And I know that we're going to see exciting times ahead in the gold miners.
Yeah, absolutely. We're very excited about it. I mean, mining hasn't done so well for the last few years, and I think people have been waiting and waiting. And of course, with gold, we've been talking about this forever. That listen, all this printing of money's got to catch up at some point, right?
Mhm.
So here we are.
Yeah. So the Federal Reserve made some interesting, I guess, turns in their policy recently. Jerome Powell made some announcements having to do with inflation, how they would target it over time, and how they would continue their easy money policy. I wanted to get your thoughts on what you thought, what effect you thought that would have.
Well, I think it's going to have a very positive effect on gold because, governments do what they always do. They lie, right? I mean, all the time, right? It was newsflash, right? I mean, look, they keep pushing the interest rates down. Now we're at zero. I mean, where's it going to go, right? And bottom line is, at some point, right, you can't fool the public, all the time, right? I mean, look, it's a simple analogy of how these policies are just driving the dollar to be worth nothing. When I was growing up in the 70s, my dad's a civil engineer. He used to make about $45,000 a year. The house we bought at the time was about $45,000. Today, a civil engineer makes about $85,000. But you know what that house is worth today? Over $1 million, right? So, I mean, that's what all these policies, they keep rejigging all this to try to fool us and say, well, inflation is not that much. And, they keep pushing they keep taking all the little indicators out, right? Whether it's food or gasoline. I mean, what are they even measuring these things on these days? I mean, it's crazy.
Yeah, it's the inflation, I think, has gotten crazy. And I think we're going to see more of it given their inflationary policies. And so gold seems to be the safe haven that people are starting to become aware of. Do you think that case is becoming apparent because only about 0.5% of U.S. investors are actually in gold at this point?
Well, I think that's what the exciting part is, right? Is that people are starting to become more and more aware. I mean, look at just recently, Warren Buffett, right? The financial guru of the world, right? I mean, one of the brightest financial minds, arguably one of the brightest, minds around, finally got into gold. For years, he did not like gold, right? As you know, I'm sure you know, right? So finally he did. So as that type of investor comes in and the mainstream media picks up, it doesn't take much, as you mentioned, right? Just 0.5%, right? It doesn't take much for those other institutions and these major, banks and portfolio managers to certainly start feeling comfortable saying, hey, if Warren Buffett's looking at this, maybe we better as well. And just a small movement from those people, will move the price of gold, incredibly.
Yeah. Going back to Fed policy, we now have negative real interest rates in the United States, but I don't think the average person is aware of that fact and what it actually means. What do you think is going to happen when the baby boomers realize that their cash is not worth what it used to be? Just as they're retiring and trying to rely on those funds.
I think it's happening right now, right? Before COVID, went to a movie, with my two kids and my wife. It was like $100. I'm like, what the heck? Like, you go to a Starbucks, you buy coffee, it's like $8. I mean, it's just crazy, right? I mean, so I think we are already realizing that the money is really becoming worthless, right? I mean, it's just getting harder and harder. And it goes back. I mean, that's why I think gold's going to continue to become extremely favorable, and people are going to start to look at their options, and the same with silver.
I agree. And I have another question for you on gold. We've got the looming presidential elections coming up. We don't know if it's going to switch over to the Democrats this time or if they're going to stay with Trump. Does gold care? I mean, does it matter to the gold market who gets elected?
I don't think gold cares, because I think if you're kind of damned if you do and you're damned if you don't, right? I mean, the situation here is, regardless of what party affiliation you have, the reality is you got the Republicans, under them right now we've seen this incredible chaos. I mean, I don't know. Can you remember in your lifetime ever this kind of chaos, whether it's in the financial markets or whether it's socially? I mean, riots and demonstrations, and now you got COVID and management, and the governor says one thing and the mayor says one thing. I mean, this is mass confusion, right? So this is the environment that the gold loves. So if the Republicans stay in, I don't see much change during that, and all that unrest, I think it continues because the country is so divided. And if the Democrats get in, you got such a left-leaning, policies that you're going to see even more printing of the money, right? So I don't think it matters which way it is. Gold is just in the perfect environment to take off.
Yeah, I agree with you. I want to change gears and talk about Blue Lagoon and your projects. You're able to purchase your flagship asset without spending any cash for about half of what the previous owners had already spent on it, and before it's production ready. So how were you able to acquire that deal?
Three key things, right? One was just timing, being at the right place at the right time. When we started talking to these people, gold was only at about 1450, a few months ago. So it hadn't really started picked up, and nobody was really talking about it. Warren Buffett hadn't gone in yet, right? So it was good timing for us for that part. And then just being patient and just having real using every negotiating skill that I learned. It's funny, when I was a kid, I'm from an immigrant family. My dad, we'd go as a family to shop at Sears, and my dad would bargain with the sales person. And as a 13, 14-year-old, you'd be embarrassed, right? But you know what, he got a deal every time, right? And so you learn that and it stays with you. So yeah, I just did a lot of hard negotiations with the wonderful people. But I had to do the best thing for our shareholders, and patience, timing, and just solid good old negotiating got us with zero cash. We acquired this property.
Yeah, that's a great deal to start off with. I know a lot of companies spend a lot of money trying to acquire assets in the ground, especially the big producers. And I really think sometimes the small producers have a sort of an advantage there because they can go and acquire these properties for pennies on the dollar, and that leaves a lot of the values left over for the shareholder. The project you have named Dome Mountain has about 85,000 ounces of mineable gold under the current life of the mine, but I understand that's only a fraction of the overall size of the district. Can you talk about that?
Yeah, we're very fortunate. People look at this project and go, "Wow, I can't believe that this thing has such a vast potential still." Well, the reason is because the previous owners, they had a mine first mentality, right? So what they were, they were a private company, over 1,200 shareholders in that company, and they really just wanted to put this thing into production. Start to generate that revenue and pay dividends, which makes sense for a private company, right? So they didn't focus at all on the vast area surrounding the mine that has there's 15 known veins already there, and then beyond that there's still a whole 90% of it's like a huge property. It's like 12,000 almost hectares, and none of that has been explored, and we're very excited to get in there and take a look to see what else we can find.
Yeah, that adds a lot of extra value for investors who are getting in when you haven't had all of the drilling done. Of course, you don't know what you're going to find, but oftentimes you'll find many more ounces, and that's just added value for people getting in at the early stages. So, right. Reading up on the project, it found that you have 4 ounces of silver for every 1 ounce of gold, but that the cost of producing gold already includes the silver cost. So essentially, you're getting that for free. What does that mean, especially in terms of what the value profile looks for silver?
Well, it's funny, most gold companies, that's what they were doing. They weren't really paying attention to the silver, right? Because, often, as the silver comes along with it. So, we were no different. And suddenly, silver is taking off and, leading, thought leaders like Eric Sprott, people who are in this environment are talking about $50 plus silver, and of course, silver's made a pretty good move here over the last few months. So silver is becoming very important, and yeah, we've got currently. We've got about a 4-to-1 ratio, a little over 4-to-1 ratio, and all our costs. When we ship that material to the mill, they don't say, well, we're going to charge you this much for gold and this much for silver, right? All that cost for processing it is already included, and the silver is just a bonus. So it's going to pay for all our expenses and much more.
Mm. What are some of the other properties the company owns, and do you have exit strategy with those?
Yeah, so when we did this deal, they had another property that I got them to throw in called the Big Onion. It's right next to our main property, the Dome Mountain, and it's a big copper project. And so copper is starting to come into play. It's gone over $3 Canadian here recently, and that's starting to create a lot of excitement. So, we already have people looking at it, that project. So I intend to get that monetized. I'm a big believer of focus. So I'm going, what I want to do is really focus on the Dome Mountain and the gold and the silver that we have there, and do the exploration. So we're figuring out how to get that monetized and get some more, cash into the treasury. And then we also have a property called the Palair property, which is in central British Columbia. Again, a very nice property, high grade gold veins, and we're just looking at to see how we can get that monetized. The most exciting thing I like about that property is we have about more than 25,000 tons of mineralized material just sitting there in a pile. It's been sitting there for years, and now with gold where it's at, that's worth a lot of money. And you know what? We don't need any permits for that. We just got to start getting those trucks in there and getting that out and getting it to a mill to process, and we can monetize that. So those are some of the sort of the short-term to medium-term plans that we have beyond the Dome Mountain project.
Okay. So one thing that a lot of investors are interested in is the capital structure of the company, how much debt you have, how many shares are outstanding, and why it would be a good investment for them. Can you talk a little bit about the capital structure?
Yeah, so we've got 69 million shares out right now, and a big portion of that is just the financing that we just did recently. When we did the Dome Mountain deal, we issued. So as we talked about earlier, it was zero cash, and we did the deal at all shares, which is roughly 13.5 million shares that we issued to those parties, but they were all escrowed. They were all escrowed for 30 months. So the first stop, 10% comes out next April. So, the structure is still very, very tight, very, very intact. We just raised $7.5 million. And as that's going to give us the money that's required, because there's two key things here in our property. I need about $1.5 million to $2 million to do the amendments that I need to put the mine into production. And number two, I need sort of $3 to $4 million to go out there and do the first set of expanded aggressive drilling to see what else we have there. So with $7.5 million and a pretty tight share structure still, we've got very, very confident that we can build real good shareholder value here at this entry level.
Okay. Where can North American investors find your shares? What markets are you trading on?
So we're on the CSE in Canada under the symbol BLLG, and we're on the OTC in the US under the symbol BLAGF.
Okay, great. Rana, it's been great speaking with you today. I think you have what looks like a very interesting project. Definitely a great time to be involved in that sector. And I think the mine shares are about to do very, very well. That's what we've been talking about on our channel. So happy to have you on. Thank you so much. I appreciate the time.
Thanks for the opportunity.